Hey there, investing iguanas! Iggy here, and today we're diving deep into the impact of Singapore's 2024 National Day rally on the stock market. As a financial analyst, I've been closely watching Prime Minister Lawrence Wong's speech and the market's reaction. In this video, I'll break down the key policy changes announced, analyze how they might affect different sectors, and share my thoughts on what it means for investors like you and me. By the end of this video, you'll have a clearer understanding of the potential implications of these policy shifts and how to navigate the market in light of these changes. First off, let's recap the major policy resets PM Wong outlined in his speech, which marked a significant shift in the government's approach to addressing the nation's most pressing concerns. He announced several initiatives aimed at improving employment, education, housing, and overall well-being for Singaporeans, demonstrating a commitment to enhancing the lives of citizens. These initiatives include replacing the gifted education program with a new approach tailored to high-ability learners, a move aimed at fostering a more inclusive education system. Additionally, PM Wong prioritized build-to-order, BTO flats for singles who wish to live near their families, a policy change that acknowledges the importance of family and community ties. Furthermore, the introduction of 10 weeks of shared parental leave underscores the government's recognition of the need for greater work-life balance and support for working parents. While some critics view these policy resets as reluctant concessions to growing public pressure, the stock market's positive reaction suggests that investors welcome the government's willingness to adapt and evolve. This renewed focus on social welfare and equality may help address long-standing issues and promote a more equitable society, which could have far-reaching benefits for Singapore's economic growth and stability. The Straits Times Index, STI, opened 1.1% higher on Monday morning following the rally, suggesting investors saw these policy changes as positive for economic growth and social stability in the long run. As of August 19, 2024, the STI stands at 3,238.10 points, up 3.48% since the beginning of the year. Sectors like education and real estate development could benefit from these new initiatives. For instance, CapitaLand Investment Limited, SGX-9CI, a major player in the real estate sector, is currently trading at $3.96 with a price-to-book ratio of 0.94, indicating potential undervaluation. OCBC Investment Research has a buy rating on CapitaLand Investment with a target price of $4.48, suggesting a potential upside of 13.1%. There are concerns that these policies may not address the root causes of social inequality and may instead create a sense of dependence on government support. Now let's talk about the elephant in the room: inflation and rising cost of living. PM Wong acknowledged these are major concerns affecting Singaporeans' daily expenses. While he highlighted steps taken to support lower-wage workers and vulnerable families, more may need to be done to tackle these issues head-on. If inflation continues to squeeze consumer spending, it could be a headwind for certain consumer-facing stocks. For example, Sheng Siong Group Limited, SGX-OV8, a leading supermarket chain in Singapore, recently reported a 6.4% year-on-year decline in net profit for the second quarter of 2024, citing higher operating costs and weaker consumer sentiment. Despite these challenges, some analysts remain optimistic about the market's prospects. DBS Group Research recently released a report highlighting 11 undervalued stocks in Singapore as of August 2024. These include Fraser's Logistics and Commercial Trust, SGX, BU, with a price-to-book ratio of 0.86 and a dividend yield of 6.8%, and Mapletree Logistics Trust, SGX M44U, with a price-to-book ratio of 0.87 and a dividend yield of 6.6%. DBS analysts believe these stocks offer attractive valuations and potential upside for investors. Looking ahead, the longer-term impact of PM Wong's policy changes on the stock market will depend on several key factors. Firstly, the success of these initiatives hinges on effective execution and reception by Singaporeans. If the policies are well implemented and resonate with the population, they could lead to increased confidence in the government's leadership, which may positively impact the stock market. Additionally, the policy's ability to genuinely enhance citizens' well-being and social mobility will be crucial. If they succeed in addressing pressing social issues and promoting economic equality, this could lead to increased economic growth and stability, which would likely boost the stock market. Furthermore, Singapore's ability to manage inflation while maintaining economic competitiveness will play a vital role in shaping the stock market's response. If the government can strike a balance between controlling inflation and supporting businesses, this could foster a favorable investment climate, leading to increased market activity and growth. As an investor, it's crucial to monitor the rollout and public response to these policy changes closely. Keep an eye on key economic indicators like GDP growth, unemployment rates, and consumer sentiment to gauge the broader market outlook. Diversification across sectors and asset classes remains a prudent strategy to manage risk in an uncertain environment. Current analyst forecasts for the STI are cautiously optimistic. According to Trading Economics global macro models and analyst expectations, the STI is expected to trade at 3,188.32 points by the end of the third quarter of 2024 and at 3,093.64 points in 1 year's time. While these projections suggest a slight downside from current levels, they also reflect the market's resilience in the face of global economic headwinds and domestic policy changes. In summary, the 2024 National Day rally marked a significant turning point in Singapore's history, as Prime Minister Wong unveiled a comprehensive suite of policy changes poised to reshape the nation's social and economic fabric in the years to come. The stock market's initial response was decidedly bullish, reflecting optimism about the potential for these reforms to drive growth and innovation. However, the long-term impact of these policies will hinge on the government's ability to execute them effectively, ensuring that the benefits are equitably distributed and that the most pressing concerns, such as inflation and social inequality, are meaningfully addressed. As the government navigates this complex landscape, its success in striking a balance between economic competitiveness and social welfare will be crucial in determining the ultimate outcome. If successful, these policies could cement Singapore's position as a beacon of prosperity and stability. But if they falter, the consequences could be far-reaching, underscoring the importance of careful planning, implementation, and ongoing evaluation. As always, stay informed, stay diversified, and make investment decisions based on your personal financial goals and risk tolerance. If you found this analysis helpful, be sure to smash that like button and subscribe to The Investing Iguana for more insights on navigating the ever-changing world of finance. Don't forget to hit the bell icon to get notified whenever we upload new content. And if you have any questions or topics you'd like me to cover in future videos, leave them in the comments below. Until next time, stay savvy and keep investing, iguanas.